The removal of the federal consumer carbon tax helped push inflation sharply lower for April. But core inflation, of course, which is watched by the Bank of Canada, was higher. Let's bring in Francis Fong. He's managing director at TD Economics. He joins us now to talk some more about this. Francis, thanks for coming in.
Pleasure to be here.
What do you do with a number where you've got that dramatic drop, right, for inflation, but then that's not the number the Bank of Canada is watching? What do you think they do with this information?
I mean, this was a really tough report for the bank. If we look at all of the different factors that were sort of feeding into these numbers, both core and headline, you had a lot of different impulses. First of all, you had the federal fuel charge that dropped off, as you already mentioned. We still had the lingering effects of the GST holiday that the previous Trudeau government had put in that was coming off. And so that was impacting food inflation.
Sure.
Yeah, but particularly purchase from stores and restaurants and things of the like. And then you had some early impacts coming from the tariffs. Like, we're already starting to see those impacts in things like poultry and other kinds of meat, some autos, things like that. So that was coming off. And then against this entire backdrop of a weakening economy, we still have the labor market that's not showing great signs of strength. And all of that is going to feed into the bank's decision, trying to parse out, what's persistent here, what's transitory, what am I supposed to focus on in terms of those underlying core inflationary pressures, which in our view are still weakening, but all of these confusing signals is making it very difficult.
Yeah, it's about 100 different hits. Let's talk about energy prices to start. You mentioned the carbon tax is gone, so that has added to the big drop. But then you also had oil prices and natural gas prices drop as well. How much from what?
Oh, well, it was going to be primarily from the federal fuel charge, given that, we're talking about years of accumulation of that carbon price that was coming off. But to your point, there's definitely going to be impacts coming from falling natural gas and oil prices. Natural gas for home heating, for example, dropped 18% on a month-over-month basis. Non-seasonally adjusted, of course, but on the same token, that just goes to show you how significant of a drop-off both of those impacts combined are affecting prices.
We saw food prices start trending upwards, or they've been up for a while. I'm wondering what you expect moving forward. The problem with the tariffs, as we've discussed, is on, off. Where do they apply now? Who's pivoting to get things from other places? So do you expect food inflation to carry on? I
mean, your guess is as good as anybody else's, reality. That's the unfortunate sort of reality that we're all in. How are these tariffs going to be absorbed by businesses versus sort of passed on to consumers? At what point do we get a deal? We already see President Trump and his administration starting to make deals with the UK, with China. All of those things, I think, are really positive. In addition, we are also seeing the speed at which things that were previously not CUSMA compliant, non-CUSMA compliant, become compliant. So there's a lot of factors sort of coming in. That being said, we are already seeing it in certain kinds of prices, and I suspect it'll be sort of a slow bleed into actual consumer prices over time. So the anticipation would be rising prices in some core components over time. But that being said, the instant these deals start to get made, there's still going to be some businesses on the fence that are going to say, well, do I just wait for a deal and then sort of wait for the tariffs to come off completely? Because that's also sort of a reasonable business decision as well.
Okay, so we talked about sort of the mixed numbers here for the Bank of Canada when they're trying to read through. What kind of information do you think will weigh most heavily for them moving forward?
I think it's going to be, unfortunately, the fundamentals, looking at where growth goes, looking at where particularly the labor market goes, and then trying to parse out where you can the sort of true impulses of underlying inflationary pressures and those core goods components that they'll certainly be looking for. So, unfortunately, these top line numbers are really not going to be all that helpful. It's going to be, where do we actually see prices that are going to be less impacted from a lot of these policy decisions that we've seen in the past? Where can we sort of pair that up with sort of new information about the labor market, wage gains, things of that nature, all of which are pointing in sort of a downward direction. Wage gains slowing, unemployment rate either steady or rising, job gains also slowing. All of that points to sort of the need, we believe, for continued support in terms of interest rate cuts. But timing of those, and the number is still an open question.
Okay, talk to me about Jerome Powell as well, because there has been a very sort of careful sidelining of, we also want to see what's happening. We're not going to pull the trigger on anything until Do you see the Bank of Canada and the U.S. Federal Reserve going sort of their own ways, even more so towards the end of the year?
Yeah, I think this is going to be one of those situations where when the U.S. sneezes, Canada catches a cold. We have always been disproportionately impacted, and so by necessity, I think Powell and Macklem are going to be looking at their own sets of data, making their own decisions, and if they go in different directions, so be it.
What do you think will weigh more heavily on them? You mentioned for Canada, wondering what you think will weigh more heavily for the Americans.
I think it's just going to be the degree to which businesses pass on those higher tariffs and the degree to which we start to see more persistent inflationary pressures. Powell has repeatedly sort of hammered on inflation expectations as being a core gauge of of how persistent those higher inflation will be. And so I suspect he's going to be very narrowly focused on things of that nature. Whereas in Canada, I think the sort of broader growth picture is going to be more top of mind for the Bank of Canada.
Got it. Do you have to leave the conversation there, Francis? Thanks for coming in. Appreciate your time.
Always a pleasure.
Francis Fong is a managing director at TD Economics.